Hey everyone, welcome back to another episode of the Loan Officer Leadership Podcast. I'm your host, Steve Kiles, and we are powered by the Mortgage Marketing Animals. And today we're going to continue the series on scripting. And as we continue to talk about it, one of the things that we're uncovering is really scripts are conversations by design. So if you wanted to know how to have an effective loan consultation and/or train your mortgage expert or the person who's doing your loan consultations, hey, don't go any further. This is going to be the right episode for you. Here's what I'm going to do. I'm going to take my time and I'm going to break down the loan consultation, and then I'm going to walk you through the scripting so that you've got what you need to have an effective loan consultation. So excited about it. And here's what we're going to do. I'm going to go ahead and just start walking you through. Let me do one thing before I get started. I do want to thank you for all of the reviews that you are leaving wherever you consume podcasts, at Apple or Google or iTunes, wherever that is. I just want to say thank you. And if you would you take a minute and give us a review, an honest review about how much this podcast means to you and what it's doing for you? It helps us get the word out. And if you'll do it, take a picture of the review you give and then send it to support@themarketinganimals.com, support@themarketinganimals.com, and we will give you Carl White's brand new book, Loan Officer Champions. We'd love to put it in your hands. It's an encouraging book of literally rags to riches, loan officers that have started with very little or nothing and grown significant businesses in the last several years. And it's intended for you to be able to read it and say, man, I can relate to that. And if he can do it, I can do it. And so we want to put it in your hands. Give us a review, take a picture of it, give us your address, and send the email to support@themarketinganimals. Jay Cordes, I hope I'm saying your last name right, but Jay Cordes 75 left this great review and said, hey, I love the podcast for the simple truth of how this statement sums it all up. Anything we're doing is worth doing badly. Just get started. He went on to say a bunch of other things, but I just got to say thank you for your honest review. Thank you for helping us get the word out. And also, if you haven't already, click subscribe to where you consume podcasts, and it'll literally come through automatically. So subscribe. And if you've got 3 loan officers you know that would benefit from this, share it with them. Help us get the word out. It helps us make a difference in this industry and in our community. So thank you for what you're doing. All right, let's dive in. Loan consultation. What really prompted this is I'm going through every step of my branch's process. So I'm a producing branch manager. So I've got a production team, and then I also run a large branch. And so what we've done is for the last several months, just literally taken each step in my personal production team, which overflows into the branch, and just saying, okay, how do we tighten not only the process, but the script? And if you'll listen to the previous episode about scripts, I know most people, when you hear it, if it's your first time to hear us talk about scripts, you're thinking, man, I don't want to be robotic. I don't want to be cold. That's not what a script is. A script is a designed conversation, or a conversation by design that produces results. And so what we want to do is, when you have a clear process on how you do things, it creates comfort and security, not only for the client, but for the agent partner and for your team members. Because it's not, I remember in the business, and I've been doing this for, 19 years. I keep saying 18, but really it's 19 years now. March will be 20. And one of the things that it was almost like you live in a constant, just this constant chaos. Like I don't know who's got it. You got it. I got it. Go, 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 go. We got to respond. We got to move. Go, go, go. And it was just this weirdly intoxicating chaos. And I'm just like, oh my gosh, you cannot live in chaos. Chaos does not create comfort. Processes, systems, structure create comfort. Because if you've got the right process and the right system, the right structure, and the right designed conversation or script, you're literally making it so smooth and seamless and flawless. And that's what really leads us into an excellent business. And it's reproducible. Because if I've got a conversation by design, if I've got a loan consultation that's done the same way every time because it's an effective conversation. Literally, I don't have to go get a unicorn. Listen, we want unicorns. We all want unicorns. But let me just tell you this. I want a business built with A players, people that are committed to me, committed to the process, committed to making a difference in the lives of the families we serve, committed to being their best and playing big every day. And sometimes that's a unicorn, and sometimes that's an A player. And so that's why it's so important when we look at the loan consultation that it is something that's systematic. It cannot be longer than 30 minutes. Sometimes, or, used to, I would have a consultation. I didn't even call it a loan consultation back then, but I would have a consultation that would literally run an hour and a half. Because when I got on the phone with the borrower to go over their mortgage goals, they would say, hey, what about my credit? And hey, how do I get my credit scores up? And hey, did you get a chance? I'd like to work through all of the K1s that I have. And they would literally derail the conversation. And an hour to an hour and a half later, I felt like I had lost control of leading them through what's really important, and that's building a clear mortgage plan. So what we've done is, in the last episode, we talked about the first call. And let me just remind you, the purpose or the results of that very first call is to get the borrower, or to get the prospect to raise their hand and become a lead. So a prospect would be a name, a phone number, a first conversation, but really they don't turn into a lead until they start or complete the application. So on episode 144, we talked about the purpose of that first call. What it is I want them to, first off, I'm going to give my realtor partner a loyalty uplift. I want to make sure they know how amazing they are. They're in great hands. What I want to lead the client to is completing the application and scheduling the loan consultation. And so we schedule loan consultations from 2 to 4. And if I need a morning appointment, it's 11 to 12. So as a reminder, when you're doing your time blocking, your outbound prospecting time is 9 to 11 every day. You execute the daily success plan. Monday, it's agents, your Focus 40 and Thor's Hammer. Tuesday, it's going to be my Just Ask Tuesday update. Wednesday's my database. Thursday's my pre-approved and looking. Friday's my bonus day. 9 to 11, that's what I'm doing every day. Then from 11 to 12, can be consultations if I needed more than 2 to 4. So then we do 11 to 12 can be consultations. 12 to 2 would be coffees, lunches, appointments, video, social. 2 to 4 are loan consultations every 30 minutes. Here's what's crazy about that. If you do it 2 to 4 every day, then you literally have 20 spots for consultations. If you need 30, then you just add that extra 11 to 12 in the morning. And I can hear somebody saying, hey, well, what if my client won't do a consultation from 2 to 4? Then offer them 11 to 12. Remember this, our business is by design. And I will tell you, if you encourage them to schedule the consultation correctly, go back and listen to episode 144, and you will literally hear how to very gingerly move somebody who otherwise would feel like, no, it's not convenient. What you do is you just say, hey, listen, we're super excited to be working with you. You're very important to Brandon, our referral partner, and we're going to make you a priority. So I'm going to move some things around tomorrow so that we can get you in quickly. When most lenders take up to a week to get you pre-approved and have a consultation, we're going to do it within 24 hours. So today you're going to complete the application. And then tomorrow, what I'm going to have you do is we're going to go through building your clear mortgage plan in our 30-minute loan consultation. So how about 2 p.m.? And literally when you tell them that, people are like, oh, you're going to move things around for me? And guess what? What did I have scheduled at 2? Nothing. Now, what happens at 2:30? If I've got my 2 scheduled, I'm going to go in and schedule my 2:30. Hey, listen, I'm going to move some things around. How about 2:30? Fantastic. I'm going to do my 3, 3:30, and then 11, 11:30 if I need 6 in one day. If I needed more, I would go in and redesign it and look at it, but you do nothing. Nothing can come between your 9 to 11 prospecting. That is absolutely critical. So now we've got our consultation has been scheduled, and I like saying scheduled. I used to say booked, but I really feel like scheduled is a better word. So, I reserve the right to get better. If I find my scripts need a little tweaking, we're going to do it. So I'd like to schedule the loan consultation. So now that we've got it scheduled, Here's what we're going to do. The loan consultation, let me walk you through this. Man, I had a great call with Justin Dibbs. Brother, I appreciate you reaching out to me. Reached out, man. We had a great call yesterday. He's implemented the loan consultation. Man, his scripting and conversation was fire. You could tell he's really been working on what to say and how to say it in the right ways. And so, Justin, huge shout out to you. We talked yesterday. And let me walk you through some of the things Justin and I talked about. I felt like it was relevant for today's conversation. The loan consultation is this. You don't want it longer than 30 minutes. Longer than that, it's too long. Shorter than that, you can do if you're doing 10, 12, 14 consultations, you can get it down to 15 minutes. So I can effectively do my consultations in 15 minutes, but it's after perfecting it and recognizing, hey, here's the highlights, here's what they want, here's how I move through it. I would encourage you a 30-minute loan consultation. Then if you run out of margin, figure out a way to do 15-minute consultations. So you'll get better and they'll become more effective. And I'll tell you, in today's environment, I really find that people's attention span is shorter than it's ever been. So long consultations wear them out. Make sure it's a 30-minute consultation. That's all you need. And sometimes you'll be done at 20, 25 minutes. Don't belabor it. Be done and go. So in this 30-minute loan consultation, here's what you're doing. You're building a clear mortgage plan. So let me walk you through the mortgage plan. The reason why is this, and we've talked about it episode after episode, 60 to 70% of the population is a high ESC on the DISC assessment. And what that means is that they want to be led well. They want to be steady. They don't like a lot of change. They don't like jerking through a process. They want a clear next step. They want a clear mortgage plan. And so what we found is in using words like that, they literally resonate in the ears of over 60% of the population, where people are saying, man, of course I want a clear mortgage plan. Of course I want to know what my clear next step is. Nobody else that I've talked to talks like this. And so it gives you the competitive advantage. Now, in building the clear mortgage plan, here are the things you want to walk through, and you want to say it the same way. We're going to walk through sales price, monthly payment, cash to close, and answer any and all questions that you have. So that's what building a clear mortgage plan is all about. Sales price, monthly payment, cash to close, and answer any and all questions that you may have. And then at the end of the consultation, after you've walked them through your process, you're going to close for the business. And the biggest part of the loan consultation is asking for the business and not assuming the business. So one of the things I did, and this is really what created the loan consultation and closing for the business at the very end, asking, is there anything that would prevent me from being your lender? And it may sound odd, awkward, or weird, but I promise you that one statement will save you hours of heartache, thousands of wasted dollars, and frustration, and sometimes bitterness. You know, we talk about this. I want to get better, not bitter. How many times have you yourself lost a deal after you've literally, you worked a night, you worked a weekend, you pulled it to the front of the line, you made it a priority, you even called the listing agent. You called the listing agent. You told them all of the great things you're going to do and that you can close it in 21 days. And guess what? You help the buyer win the deal. Your realtor partner knows that it's because of you, the speed to getting it fully approved. Maybe you got it up front underwritten. You made the call when you were sitting at your kid's football game or your soccer game, or you were at your daughter's ballet. You're literally doing what it took to win the deal. And then when you say, send me over the contract to the buyer after you've helped them win the deal, given them the competitive advantage, what did they do? Come on, raise your hand. You know, you already feel it. You're like, oh my gosh, they're going to shop me. Man, that is a kick in the guts. It is, you're literally where you're kicked in your gut and you're saying, man, this is nuts. They have no idea that we're not compensated unless they go into closing. They don't understand the value of what I did to help them win in a competitive environment. And now they'll call you and they'll say, hey, Steve, Hey, listen, thank you so much for everything you did to help us win the deal. And so I'm going to go ahead and shop for, look at 2 or 3 other lenders because you know it's important that I get the lowest rate, right? It's a trick question. It's a trick question. You know, listen, I know you would do it too. You got to look out for what's best for your family. And you would do it too, right? I've got to shop for the lowest rate. And that honestly, well, not honestly, we don't say honestly, but that's a trick question in of itself. If you say, no, you shouldn't shop, they feel like you just backed them into a corner and that you're trying to take advantage of them. And now you've got to tell them all the great things you did to help them win the deal. Or if you say, yes, I completely understand, I've now given them permission to leave and not validate, or at the end of the day, allow us to get paid for all the work we did. So it's a trick question. So how do you overcome it? Well, at the end of your 30-minute loan consult, where you build the clear mortgage plan, walking through sales price, monthly payment, cash to close, answer any and all questions, you close for the business. And that's where you say, hey, is there anything that would prevent me from being your lender? Is there anything that would prevent me from being your lender? Hey, and let's say the client's name is Summer. So, hey, Summer, thank you so much for the opportunity to help you build a clear mortgage plan. We've answered all of the questions. Hey, would you do me a quick favor? Would you make sure to tell Brandon that I'm taking great care of you? Fantastic. Oh yeah, of course I will. Fantastic. Hey, listen, let me ask you before we finish our loan consultation, is there anything that would prevent me from being your lender? And then you just listen. And they're going to tell you one of two things. Nope, there's nothing that would prevent me from being your lender. You're my guy. Thank you for everything you've done. Or they're going to say, yes, I feel like I need to look or check out 2 or 3 other lenders. And so it's your job now to cut the argument. If they say, hey, listen, no, there's nothing that would prevent me from being your lender, fantastic. Here's what I want to do is let me just walk you through something, Summer. You know, most people don't realize this, but in good faith, my office and I work on your behalf. So, you know, we've gone through all the documentation. We've got you fully pre-approved. We're going to call and reach out to the listing agent. We're going to do everything we can to help you have the competitive advantage in today's marketplace. But you know, Summer, most people don't know that my office and my team are not compensated unless you go to closing. Now, I'll tell you, that's actually a good thing because it keeps us fully invested and committed to your success. So we're with you start to finish, man. We're in good faith working on your behalf, and we're fully committed to you going all the way through to closing. So in good faith, I ask that you commit to working with us. And I'm thrilled that you said there's nothing that would prevent us from being your lender. I've got to tell you, this now allows me to deploy the full resource of my office to help you purchase a home in today's environment. I'm super fired up to work with you, Summer. Thank you for the opportunity. Make sure you tell Brandon we're taking great care of you, okay? All right, see you. Literally, that's how the conversation goes. And so some of the bullet points in that I'm highlighting is there anything that would prevent me from being your lender? Regardless of what they say, really, this is what I'm saying next. In good faith, we work on your behalf. Most people don't know we're not compensated unless we go all the way through to closing. That's an advantage because it keeps us fully invested in your success, start to finish. And in good faith, we ask you to commit to working with us so that we can deploy the full resource of our office to you. Hey, listen, I know that's a lot. You know, remember this, if you ever want help with these scripts and so much more, you can go to freedomplanningcall.com, book a coaching demo, a strategy call. My team will give this to you. It's a great resource, or have somebody dictate it for you. Send it, you know, have your VA or send it through Rev, get this dictated and just start meditating on it. Just start thinking about it. Build your design conversations that are going to help. So, all right, here we go. So you're going to close for the business. Is there anything that would prevent me from being your lender? If they say, no, Steve, you're my man, I just ran through that script. If they say, yes, I really feel like I need to check with other lenders, here's what I would do. I would go ahead and push back and say, hey, what are you shopping for? See if I can get them to convert. Hey, well, I'm shopping for the lowest rate. Well, Summer, let me ask you this. I hear that often, but do you know that the lowest rate typically has the highest cost? Are you open to me showing you a better way? And I literally just get better at cutting the argument. Hey, are you open to me showing you a better way? Lowest cost typically, or the lowest rate has typically the highest cost. You said you're planning to live in the house only 3 to 5 years. I can show you mathematically where a slightly higher rate is actually better than a lower rate. Sometimes I'll throw in the fact that, listen, the lowest rate would be an FHA loan, but you qualify for a conventional loan. Even though the rate's an eighth or a quarter% higher, it actually puts you in a better position because mortgage insurance is not on that program the life of the loan. So you're telling me lowest rate, but I can show you where there's a different program that might have a slightly higher rate that puts you in a better financial position. So those are the kind of conversations we're going to have. And I'm going to try to get them to commit. But here's what I'm going to say somewhere in that conversation is the same thing. Hey, listen, Summer, I completely understand. I've walked you through the rebuttals, your concerns about the lowest rate. And it sounds like you're still going to shop. Is that right? Fantastic. Well, listen, hey, Summer, let me just let you know this. Most people don't realize that in good faith, my team and I work on your behalf. Everything we've done up until here, the calls in the evening, the working around your calendar, going through all the documentation, the K1s, the rapid rescore, everything we've done up until this point, we've done in good faith. And Summer, most people do not realize my team and I are not compensated, not $1, until you go all the way through to closing. And here's what I'll tell you, that's actually an advantage for you because what that does, it keeps my team and I fully invested in your success, not my success, your success. So it keeps us engaged, and we want to make sure to give you the competitive advantage in today's marketplace. And so the reason we ask you to commit is because we can't continue to deploy the full resource of my office until you commit. And so what I'm going to tell you, Summer, listen, I want you to hear from me. I want your business. I love working with Brandon Scott. He's one of the best agents I know. He recommended you to me because we do what we say we're going to do. We close on time, clear communication, follow up. We ensure that you have an exceptional customer experience start to finish. But here's what happens is, since you're unable to commit, the full resource of my office stops today. Doesn't mean I don't want to work with you. Doesn't mean I don't want your business. It just means I can't, in good faith, continue to give you our resources, help you win a deal, and then you look for the lowest lender on that day's pricing or market. And it could be a fluke. It could be an internet lender that absolutely just makes a mess of your transaction. And so here's what I would encourage you. Go in and look today for the next 2 or 3 lenders you feel like you want to work with. Have them walk you through their mortgage plan, have them walk you through whatever their process is, and then make a decision of who's going to be the best strategic partner to help you build and buy the biggest financial asset you likely will make in a lifetime. And if we're your team, I'd love to, but in order for us to move forward, you need to commit. So Summer, let me ask you this before we get off. Would you mind telling Brandon we're taking great care of you? Fantastic. Tell him it was a great consultation. And then after talking to the other lenders, let me know. Hey, listen, if it's all about rate and fees, get the lowest loan estimate, send it to me. I'll be happy to see if we can match it and still help you. Summer, thank you for the opportunity and for taking your time in today's 30-minute loan consult. And we'll talk to you soon. See you. And that's literally, I just went through probably more than I've done on any previous episodes or trainings, but that's how you do it. You take the core of what that design conversation is, and then you just keep pulling a tool out of your tool belt. It's like building a house, and it's like, okay, I need a hammer here, and I need a screwdriver here, and I need a trowel here, and I need a rake here, and a lawnmower there. And this is one of them. And here's what I'll tell you, what the greatest thing about a loan consultation is, at this point, you know whether they're committed. Either they are all in committed or they're not. And the greatest gift that I'm giving you today is the ability to say no. No, today is the day the full resource of my office stops. And they're like, what? What do you mean? You're not going to work on my behalf? I'm not able to. Because I cannot in good faith ask my team and I to invest our money and our time and our reputation in this marketplace to help somebody who's not committed. We help committed people get the house they're going after. We give you the competitive advantage. Well, and if that's important to you, then I'm telling you we're your right team. If it's not, let's see how the other online lenders fare in a competitive offer situation. And I think as a loan officer, it's time to have candid conversations, not rude conversations, But I think I know for me too, me too, I'm raising my hand. There was a season where it was like, I can't be that direct. It's rude. Oh my gosh, what's my referral partner going to say? They're going to think I was rude to their client and I don't care. That's not the case. What you're doing is you're showing that you're valuable. You're showing that commitment's the name of the game, because when it gets competitive and they go to a big bank that's open 9 to 5, Monday through, Thursday, Monday through Friday, and they don't have a team like us that has somebody on call on the weekend that can make that call, update the pre-approval letter, get ahead of the other offers coming in, talk about the speed to closing, talk about the fact they're upfront underwritten, talk about whatever advantage you have. Like, they don't realize how important that is until you communicate it. Most people didn't even know you don't get paid unless it closes. And so that's where it goes back to, I'm not going to assume they like me. They may like me, doesn't mean they're going to use me. Doesn't mean they're committed to me just like I am to them. Like I'm committed to my referral partner. So it's no more. Our industry will not assume the close. We will ask for the commitment, because you're worth it. You've earned it. You've got the right to say no more. Because I'll tell you this, Carl and I were talking about it. We talk every time we're together. It is just like it's a mastermind of giants for like hours and hours. And both of us are up till midnight, 1 o'clock, which we never do that unless we're together. And we were talking about, the thing about this is people can get bitter or they can get better. And the industry can be full of bitter people because they didn't draw a boundary and say, you know what, it's okay if you choose not to use me or work with me or to be a strategic partner in helping you get that home. But today, since you're no longer able to commit, the full resource of my office stops. And now you as a loan officer have taken back control, and you're not being drug around and being used and abused and manipulated and commoditized. You know what? Listen, you're worth it. I'm worth it. Then at the end of the day, you have the right to say no. Now, let me address what happens with the referral partner. I love this because that's happened and it happens. And when that happens, here's my next call. Remember this, we touch the lead. And what I would tell you is this. I'm really working out the language of the lead. I really think it's a prospect. A prospect is somebody that is a name and phone number. Until they raise their hand, they become a lead. So a lead is somebody who starts or completes an application, because that's where we can do a full loan consultation and move it through. So here's what we're doing is I'm going to touch the prospect or lead, and I'm going to touch the referral partner. That needs to happen every time. So I love that conversation. When they say I'm going to shop, I literally would pick up the very next call and I'd call Brandon. I'd say, hey, bro. Hey, Brandon, Steve Kyles. What's up, brother? Man, it is so good. Hey, did you work or play today? Played? Awesome. Man, well, hey, listen, thank you so much for referring Summer over to me. Brother, I absolutely love your recommendations and referrals, man. We're killing it so far this year. And man, I'm just honored to be your partner. But hey, I've got good and bad news. What you want first? Well, give me the good news. Good news is Summer's well qualified. Money in the bank, great credit, W-2 income, can close quickly. Well, what's the bad news? Bad news is I can't protect your commission on this one. What do you mean I can't protect your commission? What? You can't protect my commission? Hey, Brandon, listen, her number one thing was shopping rates. And so I walked through our building a clear mortgage plan, our 30-minute loan consultation. At the end, I asked everyone, is there anything that would prevent me from being your lender? And you know why we do that, because, and we walk them through the whole thing. Hey, my team and I are fully invested. We're committed. We're not compensated unless you go to closing, but we're going to deploy the full resource of our office, give you the competitive advantage. But here's where we ask you in good faith to commit. And brother, she said she can't commit. She's going to shop with 2 or 3. And the only thing that's important to her is the lowest rate. And man, you and I both know that's a recipe for disaster. The lowest rate typically has the highest problems. And so, brother, I can't protect your commission on this. But listen, if you can talk to her and help her understand the importance, and I love this line, everybody who's listening, because a lender's failure to perform will cost your client thousands of dollars. What borrowers don't know is that a big bank or an online lender can literally go to the day before closing and say, I'm sorry, we made a mistake. And that's all they have to say, in that borrower's money's lost. And so, man, if you want to talk to Summer and just educate her through the process, we'd love to, but she's got to commit for us to move forward. So, hey, and if there's anybody else, who do you have today that I can keep moving through the process and we can get back in your car this next week? And that's it, guys and girls. That is truly the conversation. Man, it is so much fun when you take back control, because we've not assumed, we've asked for commitment. We've got a clear process in the loan consultation. In this 30-minute loan consultation, we're going to build a clear mortgage plan. And so I think this is something that'll really help you. Hey, let me do one thing. As I'm even thinking about my conversation with Justin yesterday, you may have somebody that rebuts you and they say, hey, I'm not looking, for a 30-minute consultation. What's your rate and fees? That's okay. When I've got a prospect I'm talking to and they're not ready to start the application or complete the application for a loan consultation, I walk them through the importance of it. Hey, listen, you've been taught rate and fees is the number one driver, but if I can show you a better way to save money in what's possibly the largest investment you'll make, are you open to a better way? Well, I'm open to it. Hey, well, the only way we can get into the exact programs where you talk about rates and fees and savings and structure is going to be in a consultation. That means we need to complete the loan application. We need to review the credit and do a 30-minute planned consultation where we can give you strategic and sound financial advice. And if they say, hey, I'm not interested and I'm just in what's your rate, fantastic. Hey, let me look up the rate. I honestly would even throw out the rate. I'm okay with that. Hey, here's the rate. Okay, it's this. Awesome. Well, listen, if anything changes, let me know, because you're not likely to get that person to take a next step. If you can cut the argument, you can have enough of them where you're able to size it down and show them the value. That's okay. But you're going to have one, maybe 2 out of 10 do that. And really, I think our number's less, because I promise you this, the only reason why people say rate is because that's all they've been trained. They're really looking for a mortgage plan, a clear next step. So here's what I want to do, and I think this will help you. So let me just do it real quick, and I know this episode's a little bit longer, but it's intended to be thorough. So in this 30-minute loan consultation, I'm going to help you build a clear mortgage plan. We're going to walk through sales price, monthly payment, cash to close, answer any and all questions that you have. And so that's the first thing that comes out of my mouth. So Summer, hey, listen, and let me do this. I'm going to walk you through how I would do a consultation. I'm not going to have somebody talking back to me, but you'll hear the flow. Hey, so Summer, I've got to tell you, thank you so much for joining the call. In this 30-minute loan consultation, I'm going to help you build a clear mortgage plan. We're going to walk through sales price, monthly payment, cash to close, answer any and all questions that you have. And so I just wanted to say thank you for that. Hey, and as we get started, let me ask you this. What questions do you have right now in this 30-minute loan consult that I can help answer for you? Hey, well, Steve, tell me about escrows. Okay, fantastic, Summer. That's a great question. So you want to know more about how escrows work in Texas. Okay, cool. Hey, what other questions do you have? Hey, Steve, I'd like to know what happens if the appraisal comes in low. Okay, cool. So if the appraisal comes in low, what happens and how do you negotiate it? Is that right? Yeah, that's exactly right. Okay, Steve, I'd like to know about your rates. Okay, great. So you want to know where the market is and you're looking for a rate range. Is that right? Yes. Now let me stop here. Most people, when you ask, what are your questions, they would have went straight into, okay, well, here's how escrows work and blah, 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 and totally forget to ask the next question, which was appraisals, and totally not get to the next question, which is probably the one she may not have even said, which is rates. And I'll tell you, probably 6 out of 10 don't even ask interest rates. If you do the consultation right, I promise you, they don't even ask rate, because all they care about is, what home can I buy? What's my monthly payment? How much cash does it take to buy the house? So when I'm doing that, I ask them, hey, what other questions can I help answer for you before we're done so that you'll feel like this was a great consultation? And that's where they go in and say escrows, appraisal, whatever it is. And I don't stop until they have any others. Summer, you got any others? No, I think that's it. Great. So if we answer all of these questions and we go through sales price, monthly payment, cash to close, you'll feel like this was a great consultation and tell Brandon I'm taking great care of you, correct? Yeah, I'll be happy to. It sounds like that's very thorough, Steve. We answer all that in 30 minutes. It's going to be a great consultation. Great. Well, let's get started. And then I just go straight back to the top and I start with what? The sales price. Hey, so Summer, I know in today's market, it's such a fast market. Everybody, it's multiple offers. It's just crazy. Oh yeah, it's nuts. It's been great. I just hope we can land a house. Well, listen, I'm confident we're going to be able to do it. Tell me, have you already found an address of a home that you currently like? I always like to start there with sales price because listen, everybody has already found a house. So cool. So you're looking at 123 Smith Street. Fantastic. Hey, listen, I'm going to use that as an example as we go through sales price, monthly payment, cash to close. Now, Summer, let me ask you this. So I see this house is 500,000, but let me ask you, if you found the perfect house that you can absolutely not live without, what's the max you think you'll go? 550. Okay, cool. So your price range, your goal range is 5 to 550. Excellent. Okay. Hey, now let me ask you this with monthly payment. So that includes your principal and interest payment. That includes your homeowner's insurance, your property taxes, HOA, any other ancillary fees that are required on a property, regardless of the state you're in. What is the total amount you want to pay per month? Like if I'm building a budget and I'm saying this is what I want to allot every month, how much? Well, I'm looking at about $3,200. Okay, cool. So $3,200. And again, if you found the house you can't live without, what would it be? I'll go to a max of $3,500. Okay, so $3,200 to $3,500. That's a great range. Now, let me ask you, hey, and let me just offline on this. If somebody buying a $500,000 house says $1,000, I don't laugh and I don't stop them because it happens. And here's what I'll do is if Summer said, hey, I'd like my payment to be $1,000 a month. Fantastic, Summer. Here's what's great. It's all about documents and data. You've already given me a property address to look at. We'll see if those numbers work. But let me ask you this. What's the max you think you would go? So your goal would be 1,000. Does that include taxes, insurance, HOA, and everything else? Okay, it doesn't. Okay, so what would be the max you'd want to pay? 2,000. Okay, cool. So you found the house you can't live without. You want to go to a max of 2,000. That's how I would handle that. Okay. So now that we've got the monthly payment range, here's what I'm going to go to next is cash to close. So Summer, fantastic. So you're in the 5 to 550 range is ideal. 3,200 to 3,500 in total monthly payment. Now the next one's cash to close. So Summer, when people walk through cash to close, they're typically just thinking about a down payment. And in today's environment, we've already talked about you're not a veteran. So the next best down payment would be 3% as high as 25% or more down. But most people would say, hey, I want to put 3% down, and they forget about the other costs that are involved in your cash to close. So let me walk you through cash to close. It is down payment, which is a range. It is closing cost, and then it's prepaid items. So let me walk you through closing costs. When you buy a house in Texas, the closing cost range is about $3,800 to $4,800. And that includes things like the appraisal, the title, the appraisal, the title, the survey, the courier, the messenger, the state of Texas, all of the different fees that are involved when you buy a house. It could be on the low end 3,800, depending on the sales price and square footage of the house, or it could be as much as $4,800. But as long as the seller's paying title, which we're definitely going to have Brandon help you negotiate that. But as long as they pay title, that's about what closing costs are on a $500,000 home. So we've got a down payment, we've got closing costs, and then prepaid items. So in Texas, prepaid items on a $500,000 house are probably going to run you about $8,000 to $10,000 to set up the property tax, what needs to be paid, and the insurance. So it's not a cost of buying the house, it's prepaying the taxes and insurance as they come due. So when we look at down payment, closing cost, and prepaid items, what would be your total goal for cash to close? $35,000. Fantastic. Hey, well, listen, okay, so your goal, which includes down payment, closing costs, and prepaid items, is going to be $35,000. Great. Now, here's what we're going to do. We're just going to start at the top and literally just add this property address in there. So now let's go back to the property you found. So 123 Smith Street's 500,000. Noticed here when I added in the taxes, insurance, and the HOA, It came right at $3,350 a month. Man, that is perfect. It's exactly what you're looking for. And then on the cash to close, let me enter in these information. Yep. I mean, you could get in right at around $32,000. So it's a little bit less than what your goal was. How does that feel? Well, man, that feels great. It sounds like this house is exactly what I'm looking for. Hey, I would agree 100%. Let me ask you this now. Before we move on, let me run the numbers at 550 since you said that would be your top end. So that way you'll know 550 may bust us out of the range or it may keep us right in. And then I'll go back in and even just go to the top of what they were looking at, rerun the numbers. And that way they know my range is correct. 5 to 550 is the right range, keeps me 32 to 3,500 a month. And I can get in with as little as $35,000 out of pocket. And so when you do that at the end of it, you say, well, Summer, this is fantastic. Hey, listen, let me finish answering your questions about the escrows. Great question. Property taxes are paid every December. It's paid in arrears. And then I would explain escrows. Hey, on the appraisal, we're seeing probably 1 out of 10 come in low. It is, the market's growing. Not many are coming in low, but if it does, here's the 3 options that you've got if it comes in low. And we can help you with Brandon navigate that once we hit that, we cross that road. And the last one's rate. All the numbers that we ran, the numbers are on X. So today, and let's just say, so we're in a rising rate environment right now. Hey, the rate today that I ran numbers on is 3.75. We could look at as the options. I'd say the rate range is between 3.6 and 3.9. And once we get a property under contract, here's what I'll do is I'll show you those options and we'll talk through them. Based on your cash position, the lower rate's going to have a higher cost. Versus if we look at the what they call the neutral rate in today's marketplace, it's less expensive. And so it'll help you stay at that $35,000 total cash to close. So the rate range today would be right around 3.6 to 3.9. Do you have any questions? Fantastic. Well, Summer, I got to tell you, I'm thrilled to work with you. And let me ask you this. Is there anything that would prevent me from being your lender? That's it. Then you go back through the script. No, it's a great consultation. Fantastic. Hey, listen, make sure to tell Brandon I'm taking great care of you. And you know what, Summer, I'm glad you committed because one thing, and here's where I would go right back into, I don't get off the phone until they know, man, I'm so thrilled that you've committed to work with us because in good faith, my team and I are committed to your success. We're not compensated unless you close. I'm asking, we give you the competitive advantage in today's market. In good faith, I'm asking you to commit to me, and we're going to continue to deploy the full resource of my office to help you in today's marketplace have the competitive advantage and win. And so with that, that is the loan consultation. I know there's some variations and some different rabbit trails, but if you will take this podcast and you will dissect it and you will literally dig deep and find the bullet points and words that work for you, it will help you close more without getting more prospects and leads. You can do it more with less or what you currently have. So, hey, man, I hope this helps. One of the things that I'm committed to doing, and Carl and our entire team at the Mortgage Marketing Animals, we want to help you this year continue to break through barriers, continue to break records. And here's what we know. We want you to stay close to us. Join our community, be a part of what we're doing. If you feel like this is great value and you want to take it to the next level, go to freedomplanningcall.com. It's just a landing page that allows you to put a couple of pieces of information, and our team's going to call you. And we would absolutely love to help you build a clear plan to help you do more. So thank you for being on the journey with me. Make sure to subscribe. Wherever you consume podcasts, share this with 3 loan officers, not 1, not 2, 3 loan officers that will benefit from having a loan consultation script and process on their team. Get it in their hands, help them go further, help them get better. And remember this, y'all, anything worth doing is worth doing badly. Just get started. See you.